Hi there, I'm Darren McDermott and you're watching Dukascopy TV. I have Philippe Froehlicher from FGP Capital in the studio to have a look at European bonds and equities. Welcome today.
Thank you for inviting me.
So let's begin by looking at equities. But first of all, in general, looking at the volatile situation we've had in Europe recently, all focus has been on Ukraine. Now, what are your thoughts on the recent developments and how does it impact what we're going to see with equities?
Ukraine, despite the fact that it's macroeconomically relatively small, about 170 billion of GDP, it has drawn the attention that political risk is still important, and that the peace dividend that has helped equity markets over the last 20 years could change. And the very sad thing about Ukraine is that it's in a classic prisoner's dilemma between Russia, Europe, the States, and the Ukrainian people as well. It's really a lose-lose situation. If we cannot de-escalate that, it would be macroeconomically negative for Russia, macroeconomically negative for Europe. It would stop a trend of foreign direct investments over 20 years, and that's why we hope that if our president of the Federal Council has helped de-escalate the situation, that would be very positive for markets in general. Then we could again move to earnings growth in the world, and corporations in particular.
So focusing on equities a little bit more, what sort of trends have we been seeing as a result of the volatility, of the political risk, and as it gets better, what is your outlook as we're heading into the summer for European equities and maybe some Eastern European equities?
As you know, 2013 was one of the best years over the last 20 years. And it was not so much driven by earnings growth, especially in the States. They have already reached a very elevated level of 14% of GDP, but multiple expansion. And multiple expansion, you have to justify them at one stage. And that's, again, the reason why the political risk should not jeopardize the sustainability of earnings. In February, March, we had a major shift in sentiment in equities. And from momentum high flyers to most likely value solid companies with low multiples. It's a debate if this is a cyclical shift or something more important that will last for a few quarters, maybe even a year or two. When we look at European markets since the bottom of 2009, Germany, the DAX, was the best performing market. And then in certain countries you had industries that performed very well, such as luxury goods until 2012 and even part of 2013. But multiples for these fancy, popular sectors have reached extremely high levels. And in parallel to that, you have still industries, sectors that are relatively attractive. And since the beginning of the year, we have seen this sector rotation, both in the States and in Europe, in favor of utilities, energy stocks. What's very interesting is that utilities that traditionally have a lot of debt and should actually underperform in an environment of rising interest rates indicate that their strong performance this year is probably not due to the risk of rising interest rates. And this corroborates something that we have seen in bond markets as well, in several markets such as France, Portugal, Spain, Greece, where right now we have reached the 12-month low in yields. Then the big question is, can we still have a sudden reversal? Yes, it's possible, but we still believe that's extremely unlikely, and the reason is that the velocity of money, both in the States and in Europe, is still at a rock bottom, similar to the depression years of the 30s. Obviously, if we had an acceleration of the velocity of money, then the Fed would be successful in its quantitative easing policy, and then we would have to monitor if inflation comes back. But right now we see absolutely nothing in that, and that's an indication that confidence and the credit mechanism in capital market, in the banking industry, is not working properly.
Philippe, thank you very much. A pleasure having you in the studio.
Thank you.
And thank you for watching Dukascopy TV. Now do stay tuned as we have plenty more Geneva interviews heading your way. See you soon.